I want to go over crude oil today. 2 facts about crude oil. I want to go over the volatility, but first of all, I want to go over the CPI today. It was hotter than expected. We had an 8.3% CPI. There's an 8.3%. Expected was 8, and so stocks are down. And we have crude oil that has been in an uptrend. You see this big spike up and then uptrend, and it's pulled back quite a bit. Pulled back quite a bit in the uptrend, and taking all the fundamentals of geopolitical events into account and anticipating where this market might go next is tricky, but it's pulled back in an uptrend. And so the next move could be higher, and we could have an even higher CPI, and stocks could be challenged even more. The Fed would have to consider raising rates even more. And so that is one thing about CPI. CPI has cooled off because energy has gone down, but it could surge higher once again, and CPI has not gone down that much. It's still at 8.3%. And I also want to talk about crude oil volatility. I have not traded crude oil in a while, since February. The Russian invasion into Ukraine, you can visibly see the ranges pick up. So here it is in February, the invasion of Russia into Ukraine. You can see the daily ranges are much more volatile. Just a stark difference in just looking at the price prior to this vertical line. Fairly normal price action, extremely nervous price action. And there are predictions all over the map of what crude oil will do. The low end prediction is back to 65, while the upper end prediction is extremely high, $200 and $300 and $400 per barrel crude oil. It is difficult to predict, but anticipating 120 or 130 or 140 could be reasonable and could be the next move, and that could take CPI higher. I'm not trading crude oil right now. It's extremely volatile. If you look at this indicator at the bottom, average range 4.13. Each point represents $1,000. It represents $1 move in crude oil, and there's 1,000 barrels. And so $1,000 per $1 move in crude oil on the futures contract. So $4,000 daily range in crude oil right here, while the median price is around 150 or lower. If you come back here, you kind of draw a line through the middle, it's 150, less than 2, and now it's up at 4.13. You saw a spike during the pandemic when it went below 0 on the front month, and then it's rallied since. Historically, we can go back. You see over $9 here, pulling back to 4, and then we'll take a look as we go back here. You can see the spikes up to 2, up to 3, and then in 2008 you see up to 6, and then it drops off quickly on the average ranges. So that's what I wanted to share with you with crude oil, the extra volatility since Russia's invasion into Ukraine, and how another surge higher could affect CPI, inflation, monetary policy, and stocks. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.